moving on to section C. Of course, in section C, you'll be given two 25-mark questions and you'll have to pick one of them to answer. Now, how do you make the decision and how do you efficiently, so not wasting too much time, make the decision on which 25-mark question you can pick? And 100%, and the obvious choice, is the one that you can score better on. And the way to try to guess or try to estimate which one you can score better on is simply the one you're more confident with writing chains of analysis for. As a general rule is, the more chains of analysis you can write, hopefully the better you'll score. So what I would do before picking a 25-mark question, I would read both 25-mark questions and try and link them to a specific topic. So let's do this here. So number 7. I'm just going to go directly to the question. Evaluate the likely microeconomic effects of such a tax. And then in the stimulus, they talk about imposition on a 20% tax on soft drinks which contain a high level of sugar. So that tells me right now, I'm just going to try and link that to a big topic. What big topic does that link to? So we're talking about taxes, then we're talking about sugary drinks. What is sugary drink? A demerit good? How do we solve negative externalities? It's what's one policy to solve negative externalities? It's a tax. So that links mostly to me to market failure. Now let's look at the second 25-mark question. To what extent do you agree with this statement and refer to the industry? So the question, revenue maximization is more realistic business objective than profit maximization. So the main topic there is probably business objectives, but the bigger topic there is market structure, so like monopolies. So now, once I've identified the big topics, it makes thinking of points and planning much easier, which I would suggest every single student to do. I emphasize this all the time, but I've never had an A-star student which doesn't plan. But now you know the big topics in both these questions. Now it's just about what you're more confident with, what you've done most practice with. So you need to make a decision whether you're more confident. Maybe you've done loads of essays on market failure, then pick the market failure question, and vice versa. Since we're practicing, we're going to attempt both 25-mark questions, and let's start with question 7. So let's break down this question into some smaller chunks. So evaluate the likely microeconomic effects. So this is an effects question of such a tax. And like I said before, this reminds me a lot of market failure. Why? Because in the stimulus it talks about public health. So like the public, you think about welfare loss, you could think about social welfare, private welfare, for example. But then, so the Public Health England recommended imposition of a 20% tax on the sale of soft drinks that contain a high level of sugar. So now this is the planning stage of my paragraph. So when I hear all those things, like I said before, sugar is demerit, has negative externalities. How do we solve those negative externalities via tax? And the question is asking us the effects of the tax. So basically, for one of my paragraphs, all I'm going to do is, using the negative externality diagram, which you should know, you should be quite confident with, I'm going to explain the effects, run through the effects of the tax, how it affects. So when we move from the normal market equilibrium to now the socially efficient equilibrium with the tax, and explain that entire market failure theory, embed it into that question, and I know it'll pick me up a lot of marks in this question. And the way I'd get this started, and the main thing to link all this to, is the externality diagram. So let's have a shot at this just to help you explain it. So of course, what's on the axes? Y-axis would be cost slash benefits, and that's the main thing. It's not actually cost slash revenue for market failure diagrams, it's cost slash benefits. I always see when marking papers that little mistake usually by students. And then quantity or output, whatever you want to put, on the y-axis. So then let's get started with this diagram. So supply equals what? Supply equals MPC, so supply equals marginal private cost, and then our demand curve equals, in this case, in negative production externalities, equals MPB, so marginal private benefit, and it also equals MSB, which is marginal social benefit. Okay, and then of course we have our loss curve, which completes a negative production externality diagram, which is the MSC, the marginal social cost. So of course, in negative production externalities, the social cost is higher than the private cost. Now, of course, here you would label up the quantities and the welfare loss triangle. A little trick I've picked up over the years to never get your welfare loss triangle wrong, and it's a bit tricky to understand initially, but some of you will get it, is you go from your market to equilibrium. So where's the market equilibrium? Market equilibrium is simply where your supply equals demand. So this scenario where S equals MPC is equal to demand equals MPB equals MSB. So basically at this point here, so to work out your welfare loss 100% accurately every single time, doesn't matter which externality diagram you use, you go from your market equilibrium up or down to the curve you've changed. So in this scenario, you would go straight up because the curve you've changed is always going to be the social curve. So if you think about in positive externalities, your social curve shifts rightwards, it shifts to down, whereas in negative externalities, it shifts upwards. So the curve you change, which is your social curve, and then so you go from your market equilibrium to the curve you changed, and that will be the welfare loss. Now that might sound really tricky to some people, but some people will understand it. So what does this diagram show? This diagram shows, firstly, let's think about the real simple things. It shows the free market equilibrium, where the market was before the government intervened, just where the market normally operates, which is where supply equals demand. Now, out where supply equals demand, at this red point, which I'm labelling here, where is price and where is quantity? And quantity here is the amount being produced, because negative production externality diagram. So at this point here, we are producing QE. Now, if you look at QE, what does QE represent? What is the discrepancy between QE and QSE? That discrepancy represents overproduction. So basically what we're saying, at quantity QE, we're producing too many sugary drinks, and we want to be producing QSE. What does QSE represent? QSE represents the socially efficient equilibrium. This is where we're producing optimum amount of sugary drinks, in this example, for society. We're producing the right amount for society, where society, most importantly, doesn't suffer a welfare loss. And where do we find this welfare loss? Here. So when we overproduce, when we produce at QE instead of producing at QSE, so when we undertake this overproduction, it leads to this triangle of welfare loss, which of course is negative for society. So now you've shown the examiner, you understand what the problem is. So what we're going to do, we're going to then, therefore the government intervenes in the market and intervenes with a tax. So how do we show that? We show that as adding the tax here. So the government, of course, does not want this welfare loss, as its cost in the government is negative for society. So how is the government going to respond to this? The main policy the government uses in market failure to solve the market failure is a tax. So tax is going to be implemented here. So MPC plus tax. Why is it called MPC plus tax? Because producers have a private cost of production, and by taxing, they put the tax on the producers. Therefore, it's more costly for these producers to produce, therefore shifting the MPC curve to now MPC plus tax. And the reason they shift it to exactly where MSC is, as this is the optimum point, as now this means producers are now producing at QSE and at price PSE, which means they're now operating at a socially efficient equilibrium, meaning there's no welfare loss, and thus their negative externality is now being internalized. And these are all microeconomic effects. All this chain of analysis has just been examples of microeconomic effects of the government implemented a tax. So one microeconomic effect, if you want to put it, the overarching effect is that the government can internalise negative externalities. Now, of course, in your 25 mark questions, there are 9 marks allocated to evaluation. So how would I evaluate this? And it's a classic evaluation point here, especially with it being related to sugary drinks. So the way I would step-by-step word it is saying, however, and this is, if I had to give you an example of a pure A-star evaluation point, it would probably be this. I'm saying it off the top of my head, so it might not be worded perfectly, but it's an absolute gem of an evaluation point. So the way I'd word it is, however, in evaluation, this depends on the price elasticity of demand of the good. Sugary drinks have an addictive nature, thus their PD is likely to be between 0 and 1. So it's likely to be less than 1, thus meaning they are inelastically demanded. So basically, sugary drinks are inelastically demanded. This therefore means despite a sharp rise in price, quantity demanded will not fall as intended, thus leading to government failure, as the government has intervened in this market and not achieved their goal of improving consumers' health, stopping the consumption of sugary drinks. And that last bit really shows the examiner you have an appreciation of what's actually going on. As yes, even though with this sugar tax, we're going to raise the loads of tax revenue, but the main overarching goal of the sugar tax isn't to raise tax revenue, is to help consumers' health, as the tax revenue they gain is going to be nothing compared to how much it costs the NHS for obesity, for treating type 2 diabetes. So basically, the main goal of this tax is to improve consumers' health, improve the public's health. So the main aim of this tax is to improve consumers' health, but since the good is inelastically demanded, they will gain lots of tax revenue, but quantity demanded won't actually fall significantly, thus meaning we haven't actually reached the intended goal of the tax, which is a reduction in the overconsumption. Moving on to the second paragraph. So, if we read the question again, evaluate the likely microeconomic effects, and those two words, microeconomic effects of the tax. What I'm thinking here now is I'm thinking about the different shareholders in the economy. So if you have managers, you have your CEOs, you have your employees, you have your consumers, you have your producers, and specifically those last two. Consumers and producers are of course the most affected by taxes. And just explaining and of course using a diagram to illustrate this, and this is why strong diagram theory, knowing how to manipulate your diagrams can really, and it's really needed to pick up those top marks. But yeah, I would probably focus this last and second paragraph on just put the effects on of the tax, the producer burden and the consumer burden of the tax. So all I'm going to do is a simple supply and demand diagram and just shifting the supply curve inwards to show the tax, and then I'm going to represent using the quantities and the price, the producer and consumer burden. So just simple supply, then of course in your actual exam you can write out supply and demand, but we're just illustrating here, so I'm not going to write the entire thing out. And then of course, what does a tax do to supply? Increases producer's cost of production. That will shift supply inwards to S plus tax. And now let's label all this up. Okay, so this is all the simple labels done. Now how do you show the consumer and producer surplus? Now in this video I'm not going to explain why they are where they are. I'm just going to show you it as it's just exam technique basically. So all you have to do is go from your new equilibrium, which is S plus tax, so where P1 and Q1 intersect, so where S plus tax and demand intersects. So basically this point here, you just go straight down until you hit your supply curve and then go left from there. So basically you're trying to make like a little rectangle type thing. So basically just go left from here, and now this is how you show your consumer and producer burden. And this purple box here, so this box here would be the consumer burden, and this purple box here represents the consumer burden. So what is the purple box? It's just up until, so above the PE price, so from the PE price till the P1 price, and if you want to put A, B, you can put A, B there, so P1, A, B, PE. And quickly, just always question yourself what these things mean. What does consumer burden actually mean to you? It's the proportion of the tax paid by consumers in terms of higher prices. So how much of the tax the consumers are actually paying. And then the box below that, so this box here, we can label this up, and this is of course the producer burden. And in economics, you constantly need to be questioning your assumptions, especially in evaluation. It's the most effective way to evaluate. And here we're assuming that producers are going to pass some of the price of the tax onto consumers. So some of the tax is being passed onto consumers, as if the producers just decided to internalize the tax, therefore there would be no consumer burden of the tax. Now, since this question is quite general about just the microeconomic effects of the tax, you could even label this diagram further, which is all this area, so pretty much all this box here, which my pen will not decide to label. So pretty much all this box here, so all this box we've labelled, what else does this represent? This represents government revenue. So this is the government tax revenue they're gaining from the tax. And if you want it to be technical, the area is P1, A, C, D. So that is basically just this, basically both the boxes, is the government revenue from the tax. And this is another effect you can talk about in this question. Maybe you can talk about how they can allocate this tax revenue. So you can say they can use this sugar tax revenue to maybe subsidise firms that are making sugar-free drinks, therefore allowing for more substitutes in the market, so individuals substitute away from those sugary drinks to now sugar-free alternatives. Then also in the diagram, if you want to go a bit more in depth with producers, let's think about revenue. So how do we build up revenue? Revenue, of course, a very simple equation, is price times quantity. So let's try to think about where was producers' revenue before the tax was implemented. So before the tax was implemented, like I said, it's price times quantity. So let's just ignore this side of the diagram. Let's just think about before the tax was implemented. So where was producer's price? Producer's price was PE. And where was producer's quantity? It was QE. So basically this entire box here was producer's revenue. So if you want to be technical with the annotations, you can say producer's revenue before was PE, E, QE, F. So this box was producer's revenue before. But now, what is producer's revenue after the tax? And now this is a classic one that catches students out. So even though price is now P1, remember this entire box is going to the government in terms of tax revenue. So what are producers actually getting? producers are only actually getting C. So producers' revenue after the tax has been implemented is this small box of CDQ1F. So CDQ1F is the producer's revenue after the tax. And then, of course, the most obvious thing on the diagram, which you probably would mention, is this triangle here, which is the deadweight loss caused by the government as they've reduced quantity from QE to Q1. But simply, the triangle of ADE is the triangle of deadweight loss. That was just me briefly explaining the diagram. Now you put all that knowledge into a well-structured, organised chain of analysis. Imagine how many marks you can pick up. The sky's your limit. Well, 25 out of 25 is your limit. But it just shows good diagram theory, that knowing how to construct chain of analysis, good content knowledge can really make that essay easy. And then, of course, like I said before, there are 9 marks allocated in 25 markers for evaluation. Here, there should be no problem with you evaluating. There are not thousands, but hundreds of different great evaluation points here. One evaluation point, a few that just comes to my head off the top of my head, like before I mentioned, the assumptions. So assuming the tax is passed on to consumers, producers could just internalise the tax, thus not increase the price. That's a great one. And then the different size of the tax is a great one always. So for example, we're assuming the tax is at S plus tax. What if the tax was here? It totally changes the dynamic. What if the tax is too big? What if the tax is too small? And things like government failure, you can talk about the law of unintended consequences. So by the government taxing sugary drinks, it could lead to things like black markets forming, therefore meaning that the government lose out on tax revenue, people are still over-consuming, and basically the government, again, it's a misallocation of resources. Another absolute classic, I only wanted to give one evaluation point here, but a classic one you have to include if anything to do with taxes is regressiveness, income inequality. You can even draw a Lorenz curve, maybe Gini coefficient add in there. But taxes, in the nature of taxes, they are regressive. Why? Because they impact every single individual equally. And if you impact every single individual equally, say, because in this stimulus, they're saying this is a 20% tax. So every single individual, whether you are Alan Sugar, or whether you are some really poor immigrant that's just moved into London, you're going to be paying that 20% sugar tax. Is that fair? That new immigrant that might make £10 a week is paying the same amount of sugar tax as Alan Sugar. And Alan Sugar is a rich person, and I just realised he has sugar in his name. That wasn't meant to be a joke, but let's make a scenario. There's a really rich person. He's paying the same amount of sugar tax in a percentage as a poor individual who might be making £10, and that rich person is making maybe £1 million plus a year. So we say that sugar tax is a larger percentage of that individual's income. So that low income individual is a larger percentage of their income, therefore disproportionately affects this lower income individual, thus has regressive effects. It's regressive in its nature since it affects the low income households, the low income individuals, a lot more than the high income individuals, as that maybe, like we've shown here, that consumer burden, the percentage that consumers pay of this tax, yeah, maybe it's only 20% increase on your Sprite can, but that 20% might be 10% of someone's income, and compared to a really rich individual like Alan Sugar, it might be 0.0001% of his income. So it's not going to affect him basically at all, but it's going to disproportionately affect this low income individual, which will widen the income inequality gap, which is obviously something we do not want. But of course, in the UK, if you think about some real world application, the income inequality gap is definitely widening. Especially, it's a really good bit of application to read up on, and just really good stats, especially after COVID. In COVID, the UK created about 895 billion worth of new money in quantitative easing. Where was a lot of that money allocated towards? A lot of it ended up on those rich individuals' pockets, basically, especially with like things like dodgy NHS contracts, dodgy just contracts by Boris Johnson in general, meaning that the rich got richer. And of course, in COVID, you can think about the cost of living crisis. Great bit of application. Think about 8 months of consecutive double-digit inflation. Who is that going to affect the most? Again, the low-income households, the poor suffer, and the rich get richer. Also in COVID, high interest rates, 5.25%. What does that mean? The people who have got loans out, they have to pay more interest on their loans. Again, who's likely to have lots of loans out? Low-income individuals. Again, poor get poorer. But I'm not Greta Thunberg, but they are really good stats for your essays to know about just general, especially I would 100%, especially for your macro paper, 100% revise COVID, revise the statistics around it, since there are some absolute gems in there.